Hey guys, this is Stanley here. So welcome to Rich Dream Success Academy. In this first video, I just want to go ahead and get you guys introduced to Forex and exactly how to start trading in the foreign exchange markets. The very first thing that you want to do is you want to go to www.tradersway.com. You want to go to tradersway.com. This is the brokerage account that you're going to be using. Okay, when you're trading in the forex market, you need to trade it through a broker. It's how you're able to trade in the market. So you're going to go to tradersway.com. You're going to click either open a demo account or open a live account. If you're a brand new beginner, you have no experience, it's your first time, you want to go ahead and open a demo account, or even if you're just simply practicing, you want to open a demo account. If you're knowledgeable on the market and you know what you're doing, you want to go ahead and open up a live account. Once you open up one of these accounts, you want to go right over here and you want to download your MetaTrader4 platform. Alright, this is the platform that you're going to be trading off of. So you want to go ahead and download MetaTrader4 from Tradersway, and you also want to go to either your Android App Store or your iPhone App Store, and you want to download the MetaTrader4 app as well. Alright, so once you have opened up your account and you have downloaded MetaTrader4, you want to go ahead and you want to open up your Tradersway MetaTrader4. It should be downloaded onto your desktop. So once you open up your screen, your MetaTrader4, it'll probably look something like this. I know right now it looks very confusing, but I promise once I'm done breaking this all down, it'll look all very simple for you. Alright, so the first thing you're going to do is once you have this, you're going to go ahead and you're going to click on File, and you're going to go ahead and click on Log into Trade Account. Alright, once you have your login information from opening that live or demo account, you want to go over here, you want to come to login, you want to put your login information, you want to put your password, and you want to click whether Tradersway Demo or Tradersway Live. Alright, once you have logged in, you'll know if you're logged in because on the right hand side you should see this. If you're not logged in, it'll probably say no connection or unauthorized user or something like that. But when you're connected, it'll show something like this on the bottom right hand corner. Okay, so the second thing you're going to do after you log in is you're going to want to go ahead and change this whole layout. Alright, so you're going to go right over here. You're going to right click on this chart, and you're going to go to properties. Once you're at property, you should see something that says colors. Okay, this is pretty much the layout that I use, and I'm going to show it to you exactly what it is right now. Alright, you want to change the color scheme to black on white. The background should be white. The foreground should be black. Foreground should be none or black. The grid, I like having no grid on mine. I take it off, I put none. The bar up, I'll make it green. Bar down, I make it red. Bull candle, bull means it's going up, and bear means it's going down. So bull candle for going up is green. It's green. And bear candle, bear means it's coming down, is red. We're gonna get all into that later. Line graph, black, volume green, orange, red, whatever. Click OK. And now your chart should look something like this. Alright. Now what you're gonna do, the third thing you're gonna do is you're gonna want to go ahead and zoom in a little bit. Alright, so you see right up here, it should be two magnifying glasses. One should have the positive sign, one should have the negative sign. The positive sign simply means that you can zoom in, and the negative sign simply means that you can zoom out. Okay. Now what you're gonna do next, as you can see here, is these are called bar candles. Alright, they're showing bars. So you want to go ahead and you want to change it to what we call candlestick charts. You're going to go right over here next to the magnifying glasses. You're going to see three buttons, okay? The one to the left is the bar chart, the one in the middle is the candlestick chart, and the one in the right is the line chart. You're going to want to go ahead and click on candlesticks. Boom. And then it should look something like this. Okay? So, when you're trading currencies, there are a lot of different options for you to choose from. There's a lot of instruments for you to use. There's a lot of different pairs for you to trade off of. For you to see all the pairs that you have, you're going to go right over here to this little folder with the green positive sign where it says create a new chart, and you're going to want to click on that. When you click on that, you're going to see different pairs pop up. For example, Euro USD, Great Britain Pound versus the US dollar, USD Swiss franc, USD Japanese yen, Australian dollars and Japanese yen, Eurasian dollars and Canadian, and then you have a lot more different pairs as you come down here. You can also trade energies like oil. You can trade metals like gold, silver. There's a lot of different option commodities and pairs for you guys to choose from. So whatever your pair you're gonna trade, you want to make sure you choose that pair. So what you're gonna do is once you have selected your color scheme and everything, you're gonna want to go ahead and make sure that you lock this in. You don't want to lose this. Okay, so you're gonna go ahead. you're going to go right over here. You're going to click on Save Template because you want to make sure that you lock this template in. So you can go ahead and title it whatever you want to title it. I'll call it Stanley's template here, and I'll save it. What this allows you to do is, let's say for example I go to another pair like Great Britain pound versus US dollar. I can go ahead and just click right over here again where it says templates, right next to the blue clock. I can come down here, click Stanley's template, and voila, I have my old template back again. Alright, you want to make sure that you have a couple of buttons clicked, like for example, you want to make sure that you have this button clicked, the little green button here. You want to make sure you have the red one clicked. Now I'm gonna go ahead and explain this whole chart layout to you. Alright, as I told you before, this chart is called a candlestick chart because all of these are called candlesticks and they all have different meanings. If the candlestick is green, that means price is going up. Okay, that means the market is going up. Alright, the market is being bullish. If the candlestick is red, that means price is coming down. The market is going bearish. A good way to remember bullish and bearish, guys, is that if a bull attacks up with his horns, and if a bear attacks down with his claws. So think of, if I say bullish, okay, what does the bull do? A bull attacks up with his horns, so it's going up. And if I say bearish, what does the bear do? A bear attacks down with his claws, so market is going down. These candlesticks represent a specific time frame, okay? Now, there are different time frames that you can choose from. There's the 1 minute, there's the 5 minutes, there is the 15 minutes, there's the 30 minutes, there is 1 hour, there is 4 hours, there is daily, weekly, and there is monthly. Now, whatever time frame you're on, for example, if I go to the hour 1 time frame, that means every candlestick here represents 1 hour, okay? This candlestick here, all the way to the right, is the candlestick that is currently in play. Alright, so we don't know what candle this is going to be until that 1 hour is up. But we know for the past 1 hour here, the market was in a bullish movement. The market was going up. The hour before that, the market was coming down. So you can see that every candlestick here represents 1 hour. If I go to the 4 hour time frame, every candlestick represents 4 hours. 4 hours, 4 hours, 4 hours. Every candlestick represents 4 hours of that time frame. Okay, if I go to the daily, every candlestick represents 1 day. So right now, this is the day that we're on. It's looking like a bullish day. This is the day that was yesterday. It was bullish. The day before that was bearish. The day before that was bearish. So every candlestick here represents 1 day. Depending on what time frame you're on, every candlestick will represent that time frame. Okay. So let's get into talking about the money. How do we make money in the forex markets? Well, when you're trading currencies, when you're trading forex, like I said, there's different pairs that you could choose from. Okay, right now we're on Great Britain pound versus the US dollar. All right. How you make your money is very simple. We make our money in terms of pips. Okay, a pip is simply the smallest move in percentage that a currency can make. All right. When we see movements like this in the market where, it starts from here and goes all the way up there, in real life, it's not much of a difference. But when it comes to this chart, it makes a lot of difference because this is a lot of money that is being transferred right here, just in the forex foreign exchange markets itself. See, forex does over $4+ trillion every single day. That's why it is one of the largest financial markets in the world. See, banks and corporations, they trade forex. They'll store your money and they'll invest into the forex markets and they'll make a profit back, and that's how they keep growing their wealth while they offer you a 0.01% interest rate. It's ridiculous, I know, but this is how banks and corporations make their money. This is how large private investors, private traders, retail traders. This is how everyone makes their money, by trading foreign exchange in a MetaTrader4 platform, or you can use like a TD MetaTrader platform. But that's all a different subject. But getting into the money, how we make our money is through pips. Okay, let me go ahead and write this down for you. Pips. Pips is the smallest price and percentage. So, if for example, let's say that this whole move here, this whole bullish move right here, it never happened, right? I'm on the 4 hour time frame, and let's say that in 4, 8, 12, 16, 24, 4, 8, 12, 16, 24, 4, 8. So in about 2.5 days, for the past 2.5 days, the market has been very bullish on GBP USD. That means the Great Britain pound has more strength over the US dollar right now. Okay, so we can see here that price went from 1.200, let's say it's 000. Okay, let's keep it very simple, and let's say that price moved 1.22000. That was where price started, 1.22000. And you can see these on right here on the side, guys. Okay, you see these numbers on the side? That's what I'm going off of. So price, the number was right over here before this large move here happened. Okay, now price went from 1.22000 all the way to right now. It's currently at, let me see here. Right now it is currently at 1.23. Now it's still going up, but let's say let me go ahead and adjust this. F234000. All right, 1.234000. Okay. Sorry. There's one less zero there. Okay, 1.23400. Alright? So, if this was where price started, and this is where price ended, in a matter of 2.5 days, that means price went up 2200, 2300, 2200 to 2300 is 100 pips, 440. So 140 pips. Okay, let me tell you how I came to that conclusion. If price goes from 1.22000 to 1.22500, that means it moved by 500 micro pips. Okay, I'm gonna get into micro pips and pips in a minute. If it goes from 22000 to 22500, it moved by 500 micro pips. All right, so like so, if price goes from 1.2200 to 1.23000, that means price went up by 1,000 micro pips. Okay, that makes sense to everybody, right? Does that make sense? Got it. Okay, so if it goes from 22000 to 23400, it went up really by 1,400 micro pips in 2.5 days. Now, guys, I'm gonna give you a very little lesson on pips and micro pips. Okay, 10 micro pips equals 1 pip. When we talk in terms of Forex terminology and everything, we don't say, oh, we caught 500 micro pips. We say we caught 50 pips, because 10 micro pips equals 1 pip. So if there's 1,000 micro pips, that means we caught 100 pips. All right, hope that makes sense to everybody. So in 2.5 days, price went up 140 pips. Okay, because it went up 1,400 micro pips. So 1,400 micro pips goes 140 pips. All right. Now here is it's the fun part. Here is how you make your money. If you open up let's say for example you saw this move coming, right? You learned the game, you did your technical analysis, you saw this whole move coming, and let's say for example you placed a buy over here. When you're trading, you have two options. You can open up an order screen and you can place either a sell or a buy. A buy is pretty much saying that you think price is going to go up from where it's at, and a sell is saying you think price is going to come down from where it's at. Now, when I refer to price, guys, I simply mean what number it is on the side. So if it's at 1.23400 right now and I say sell, I'm expecting it to keep coming down to 2300 or 2200. If I say buy, I'm expecting it to go up to 2400 or 2500. All right, does that make sense? Cool. So let's say, for example, I placed that buy down here at 1.22000. I placed a buy on a 0.10. Okay. If I placed a buy on a 0.10, that means for every micro pip, I'm gonna make 10 cents. All right. So let me go ahead and write all this down. 0.01 is a mini lot. 0.01 to 0.09 is considered a mini lot, because whatever that mini lot is how much you're gonna make for micro pip. So let's say, for example, I did a 0.01 mini lot. That means I would make 1 cent for every micro pip that moved. So if I catch 1 pip, which is 10 micro pips, I'm looking at 10 cents. If I do a 0.10 to $1, it's considered 0.99. It's considered a mini lot. Sorry, I messed up here. The 0.1 to 0.9 it's called a micro lot. Sorry about that. And 0.10 to 0.99 is called a mini lot. And 1 to 1 plus, anything above 1 is considered a standard lot. So if you do a 1 standard lot, that means you're gonna make $1 for every micro pip. So for every 10 pips, for every pip you're gonna make $10. For every 10 pips, you're gonna make $100. So depending on what lot size you opened up your position order with, you're gonna make that much money for every pip you gained. Now keep in mind, guys, Forex is risky. That means there is a risk to Forex. So the risk is for example, let's say over here you place a buy, you think price is gonna go up, and price starts coming down. For every micro pip that you go negative by, you're gonna lose that same amount of money. So for example, I place a buy down here, I placed a sell down here, right? Let's say, for example, all the way down here, I placed a sell at 1.22000. I thought it was gonna go down, but it ended up going up on me. It ended up going in a bullish trend on me. That means for every negative pip I go by, I'm gonna be losing my lot size. So let's say I have a 0.10 mini lot, and it starts going negative 1 pip on me, then I'm down $1. If it goes negative 2 pips, I'm down $2. If it goes negative 3 pips, I'm down $3. Okay? So I hope that makes sense to everybody. So there is a risk to Forex. That's why you have to learn how to trade before you invest your hard-earned money and start trading for yourself. So guys, this is pretty much the basics of learning how to trade and using the MetaTrader4 app. I have been wanting to make this video for a long time. So I hope you guys found very much value in this video. I hope you guys enjoyed it. Going into our future videos, I will be covering a lot more knowledge into Forex and how to properly trade and everything like that. If you guys have any questions, feel free to contact me. My Facebook is iStandTall. My Instagram is iStandTall. My Gmail is iStandTall@gmail.com. You can find me on Snapchat at iStandTall. If you have any questions, feel free to ask me. All right. Thank you and God bless.